Alright everybody, welcome back to the Simple Markets channel. My name is JB, and on your screen, of course, this document looks a little bit familiar, but I will mention it is not my journal today. We are actually going to be going over a subscriber of mine's journal, just like some of you watching. A little while back, he took my advice and finally reached out to me through YouTube. He's a super nice guy. He asked me for my trading journal. As you can see here, he has the template. He started filling it out and putting in the work himself. Backtesting the strategy, learning on his own. You can see his data here is absolutely fantastic. We're going to dive into it a little bit. He just finished this set of testing recently and told me if I wanted to go over it in a video or webinar, feel free, and he would love that. So I figured what better way than on YouTube I can go over his data and break it down, but I do want to read a few messages from him as well, just to hopefully open the eyes of some of you watching. Now, honestly guys, the truth is, you know I say in every single video you can reach out and DM me. It probably gets numbing at this point, but if you're a subscriber watching my channel week after week but haven't taken the opportunity to reach out to me, ask some trading questions, and maybe just share insight in general, I do think you're missing out a lot, because at the end of the day, if someone is actively telling you each and every week that you should reach out and get some guidance within your trading, or maybe some help or feedback or whatever it may be, the person who takes that opportunity is going to make it a lot further than someone sitting on the sidelines and trying to do it all themselves. So this subscriber, his name is Poria, he reached out to me and just said, "Hey JB, thank you for your YouTube videos, I learned a lot from them." And then he said, "I'd really appreciate it if you could send me the template you use for backtesting so I can get started." And he also said if your own journal is public, I'd love to have the link and see some of the entries. So I went ahead and sent him my live trading journal, and as you can see, that is the template that he used here. But more importantly, after I went over this data for him, gave him some feedback and pointers that I saw, he even was able to ask me a couple follow-up questions, which I'll talk about as well. So he said, "I've got two questions. One, I want to buy a cheap prop firm challenge while doing backtest because I know the first one I may not pass." So he of course understands the reality that yes, there is a probability with prop firms no matter what strategy that you trade. And he asked what method I would use to pass them. Should I spread my trades across multiple accounts or just ignore the correlation between currency pairs? And then he said number two, is it the right time for me to start with the prop firm now? So for question one, of course, as some of you who may watch me a lot, I told him to ignore the correlation, take the pairs and the trades as they present themselves, but I do highly recommend if you are just trying to get funded, spreading those trades across multiple funded accounts could kind of increase your chances and likelihood of passing. Compared to some of our students in the community who are working to scale towards that 7-figure in capital mark, we do have different approaches that we kind of cater theirs towards so that they can scale capital as fast as possible. And the second part I mentioned was if you have backtested a significant amount of data like this, have the data to prove that you are profitable using the strategy, 100% you are ready to go for that prop firm challenge. Or if you don't feel like putting in an evaluation fee, you can start a demo account of your own and get more comfortable with the live markets. But for those of you watching this channel in this video and you have not ever backtested the strategy that I offer for completely free, this goes back to what we talked about in the start of the video. You can bring a horse to water, but you can't force it to drink. I love helping you guys out, especially the people that support my channel. Every subscriber that has ever reached out to me in DMs has gotten an answer and help with any question they've had. I've sent trading journals, I've done trade reviews, I've helped out in whatever way I can. Of course, I would never do a data review or anything like this without your personal permission, so you don't have to worry about something like that. Because this subscriber today, he's a really nice guy, but not only did he reach out and actually take the opportunity that was in front of him, but he now has the ability in the ongoing relationship to kind of ask me whatever questions he needs in his trading, get some guidance, and it really is helpful for some of you traders out there with no guidance to get that kind of feedback, or at least some advice from someone like me who has a lot of experience in the markets. Of course, you guys know I'm not perfect here. I'm not trying to portray like I am. I just have a lot of experience in the markets. I enjoy doing this and I've been profitable for many years. So I'm just trying to help out in whatever way I can, especially for those of you supporting my channel. I appreciate every one of you. Now, his data is of course fantastic here. We can see a 39% win rate here, 83 total wins, 129 total losses, and gain of a 120%, which is absolutely unreal. In his backtesting, he turned that $100,000 account into about $220,000, which is an absolutely ridiculous return. As you can see, if we actually pull up my journal here, you can see he's fairly close to my current win rate in the live market. And we can also see here the equity curve is very smooth and consistent, despite, as we always talk about, those inevitable periods of drawdowns within there. Being able to keep your head down, keep trading, trust the process, that is what is going to make you consistently profitable as a trader. The majority of you out there, the truth is, may not be profitable at the moment because you are chasing some seriously ridiculous gains in the markets due to things like prop firms showing that 10% a month could be normal, or people on social media showing that 10% a day is normal. So before aiming for a consistent 2 to 3% per month, a lot of you out there are trying to hit those home runs and get 2 to 3% per day, and it's just really skewing your ability to be profitable. So we always preach preach that consistent and simplistic approach to the markets, trying to get that long-term growth, as opposed to aiming for the home run hits back to back to back and finding that holy grail strategy with a 90% win rate. Now, just for some examples, so some of you watching can see the kind of style he's trading with, usually in a data review, I like to pop open trades at fairly random. I don't like to just go straight down the line because I think there is a progression that comes into play, and of course those underlying probabilities we talk about as well. So I do have a few open already. I'm going to open one more. It's going to pop open this tab here, and we are going to take a look at kind of these trades here, give you guys some examples of how he traded. So step one here is a Euro Chef trade. Very easily and simply, we could see the sweep on liquidity here. Super aggressive candle at that low with a great place to have your stop loss. We ended up breaking structure to that high. We consolidated for quite a while. Finally did reach in and tap into that entry level at the 75%. You could see we actually reacted here and did reach the risk-free level, so no harm, no foul here. And he ends up moving back downwards and gaining about that 0% for the break even. The next one here is Euro AUD. Pretty simply and easily, we're just following that overall trend. A lot of people, including myself in most cases, if trend is very heavily bullish, I see a clear break of structure in a range like this with my fair value gap and all of my rules met. My liquidity sweep does not have to be anything too significant. Even something like this, we have to understand, is a fair amount of liquidity. This is about 5 to 6 candles, which is a 24-hour period in the markets, meaning a lot of orders rest between this area, especially on a 4-hour time frame. So when we see an aggressive movement that's bearish, grab that area, and then break structure to the upside, I'm more than happy to take that trade, aligning with the trend. And as you can see, this one didn't work out here. We ended up running through the negative 1%. Followed by another trade on the same exact pair actually, which is once again Euro AUD. And on this trade here, we just broke structure to the high. We had another sweep on liquidity of this consolidation area here. We're working with that bullish trend once again, and we have a fair value gap in the range right here. Price works its way back down and close to entry. We got a reaction from it, and we ended up falling through and taking the negative 1. So far we have a 0, a negative 1, a negative 1. And mind you, I opened these trades at completely random. I didn't look for wins, didn't look for losses, didn't look for break even. I'm just trying to give some real examples of the probability here. Next up, we have AUD JPY, where price is once again trending heavily upward, very similar to the other trades we saw. We have a good low that was set in place here, and then we eventually reach below that low, grabbing liquidity, breaking structure to the upside. We have 2 fair value gaps in the range here, one near the entry, one near the high. He slaps that fib on with the 75%. Very aggressively, we tap in and then run that TP for a +3. So far in this 4-trade sequence, we are +1. Next up here, we have Pound CAD. Same exact thing, very bullish trend, break a structure to the upside, huge fair value gap at entry, and this one, once again, resulting in a -1. So we are back at 0 for these 5 trades overall. Followed up again with Pound CAD, it looks like we have a break of structure to the upside, a little bit less clear of a trend here, but we have a fair value gap right around the entry level. Price taps in super quickly and aggressively, reaches that break-even level, and then we end up falling right through. So a 0% gain here, and we are still at 0%. And it was a winning trade, the final one, so Euro Chef here, we're just working bullish. We have a fair value gap, a break of structure. Now, this one is one of the scenarios, again, where I would say there isn't a very strong sweep here, but we are following that bullish momentum we're seeing. Price taps in and runs that high for a +3. Of course, those were some solid examples overall. I tried to open the trades at random, and of course they're going to be on the same kind of pairs because he tested the pairs in order here. But you can see how great and consistent this equity curve was. I hope that some of you watching take some advice or takeaways from this video. I hope some of you watching also reach out to me in DM, and maybe this is the video that finally allows you to do so. Ask me for my trading journal, ask me for my template, share me some backtesting data you have, I'll go over it and give a review, or just any questions you might have about prop firms, brokers, whatever it may be. I'm always trying to help you guys. I appreciate the support of my channel. Thank you all for watching, and I will see you guys in next week's video.